Yo, today we are discussing counter trend traders and versus trend traders. So there's a whole lot of crazy discussions going on online now with people say that trend trading is the best way to go, and if you are counter trend trading, you basically you don't even deserve to call yourself a trader if you consider yourself a counter trend trader. So in this video, we're going to discuss both two different type of traders. Like I said, the counter trend trader and the trend trader, and yeah, we're going to try and figure out what the vibe is, and what is I think what's the cause behind why someone would want to trend trade, and why would someone want to rather counter trend trade. I think both sides do make money. Personal opinion is that I do both sides. I do counter trend trading and I do trend trading. But for you guys that are maybe watching this video, you don't really get it. We're gonna break it down, and hopefully you'll be able to learn something new from this video. And you can maybe use that to your advantage in your trading. So let's start off with what exactly is counter trend trading. Counter trend trading is basically someone that sees that the overall trend is pointing towards maybe whatever direction could be, whether the trend is going towards the upside or the trend could be going towards the downside. The majority of the movement is pointing towards the downside or towards the upside. And as a counter trend trader, you are looking to take advantage of minor movements that, for example, if the major movement is pointing towards the downside, this guy that is a counter trend trader, he's maybe just looking to take a bit of that small move to the upside, bearing in mind that the overall trend is pointing towards the downside. So it's a bit more complicated just saying it like that. But a trend trader is more like someone that's just he comes into the charts, checks out his high time frames trend. So the trend could be pointing towards the downside, creating lower lows, lower highs, or upside, creating high highs, high lows. And all he does is he follows the trend. Apparently, that is what is believed to be the best and the safest way to go. But yeah, we are going to break it down in this video, and hopefully, you are going to learn something from this video. So stay tuned. Fine. Counter trend trading. So let's just say, let's start with the easiest one actually, which is trend traders. Trend traders are the guys that come into the charts. Let's say they wake up in the morning and the charts look something like this, creating lower lows, lower highs. Okay. So clearly, you can tell that this trend was a downside, is creating lower lows and lower highs as a downtrend. Okay. So the overall movement is pointing towards a downside. Yes, there is minor areas here where the market may decide to push up a little bit, and even here push up a little bit, but the overall momentum is pointing towards the downside. So as a trend trader, you are only looking to trade with the overall movement. So for someone like a trend trader, he will come into chart, identify a potential resistance where the market can come back to based on theory, and he will then wait for the market to return into this area and look for his retest of his area, and in anticipation of a continuation back to the downside. Okay, that is what a trend trader would typically do. Like a typical trend trader would wait for that no matter what. Okay. Um, but what about the counter trend traders, guys? Counter trend traders are guys, they come into the chart as well, and they also see the exact same thing as the trend trader, which is maybe the market is creating lower lows, lower highs, lower lows, lower highs, lower lows. And he sees that the overall movement is indeed pointing towards the downside. However, he decides that, you know what, today I would like to take a trade based on today's market structure. So he will then perhaps look for something like a potential buy just because of how the markets form. So if you call yourself a counter trend trader, what I would assume is that you understand fully how the market moves, the market phases. You've got a push phase, you've got an exhaustion phase, because typically speaking, based on theory, the market never just pushes directly straight down without creating sort of movements. Okay. That's why we call ourselves as technical traders. We basically study past data, and we use that past data to try and predict the future, or try and basically make a decision based on what we are looking for, okay, in a specific market. So for example, a counter trend trader, he is someone that understands the market structure. He understands how markets move, how markets behaves, how candlestick behaves, and he understands that, for instance, every time the market does go towards the downside, in this sense, let's just say it's pushing towards the downside, he understands that the market can't forever push towards the downside. Eventually it's going to hit the bottom, okay? And from this bottom, it's going to have to return to a certain level, which could be this level where sellers are looking to step in, where trend traders are trying to step in, and then from here on this level, they will then look to take a trade out and maybe look to take a sell, okay? So if you're a counter trend trader, typically that type of thinking is that you know how to trade. You can't just start counter trend trading because you have to understand first of all how market structure work. You have to understand how candlestick develop. You have to understand the sentiment and just the whole theory behind how market move in general. Okay, that's how counter trend traders usually should be thinking. Okay, but this is just an example using a downtrend. But the same thing applies when a market is moving towards the upside. Okay, as trend traders, you are looking for a market structure that clearly displays a bias. So it could be like a bullish bias where the market is just pushing higher, creating higher highs and higher lows, higher highs, higher lows. So you can clearly see that the overall movement is pointing towards the upside. And of course, just like in a downtrend, there is times in the markets where the market will be displaying minor down movements, like over here, where you push it put down, and then the second time we push up, we push a little bit down, but the overall momentum is pointing to the upside. And as a trend trader, again, you are only trying to trade with the trend. So if the overall movement is towards the upside, you are only looking for areas in the market where you can step back into the market and then buy that market. Okay, so for example, in the sense here, we've got a potential area over here where a trend trader would identify this as a potential support, so that if the market does come back into this area, they would then look for the entry signals, whatever the case may be, whatever they use. That's not what we're discussing in this video, but they will look for reasons, like it could be candlestick reasons, patterns, break and retest, engulfing candles to confirm that the support is holding in order to buy this market over here in anticipation of a continuation to the higher high. Okay, that is what a trend trader seeks for. Okay, but then a counter trend trader on the other side, he sees that the market is overall movement pointing towards the upside. Okay, the overall movement, he wakes up, he sees this as up. Okay. He also then identifies that the market could potentially come back to this level. And instead of him waiting for the market to return back to this level, he understands how market structure moves. He understands that once the market pushes from a level like it has done here, it has to exhaust at a certain point and come back to this level in order for it to continue going higher. Okay. So you can't just do this by sucking your thumb, guys. You have to obviously understand how exhaustion candlesticks form, small bodies, longer wicks, to give you hints that the market is starting to stall a bit. Perhaps this is the high where we could look for a top in order for the market to return. So you're typically trying to predict where the top or the bottom is going to be as a counter trend trader, but you're also using stuff like market structure into advantage in order to give you that extra confluence that you need in order for you to take this type of trades. Okay, so a typical counter trend trader will see this level, and if he sees like small body candlesticks starting to form around about this level, let me just make it a bit bigger. Start to see small body candlesticks with big wick rejections. That signals for him that this market is starting to stall around about this level, and perhaps you could then start to look to take a trade because now you're starting to see the market starting to stall. It could be a signal that buyers are starting to step out of the market. Perhaps people are taking profits or whatever the theory is. We don't really know. We don't know what happens in the banks or what happens in institutions itself. All we know is that we've got past data that we are relying on. And don't take my word for any of this things I'm saying. I would highly recommend that you go home, do some back testing, at least 100 trades on whatever I do teach you, and see how it all works out for yourself. So they will see that the market starting to exhaust over here, and then for some reason they will then, use perhaps market structures such as stalling, usually on smaller time frame, will indicate that the market is starting to range. Okay, and if the market is ranging, it means that there's indecision. So if it's indecision that's occurring after a massive push over here, and then all of a sudden it's indecision, that's a hint that buyers are not having as much steam as they usually would have had in this level over here. So they're starting to store out after massive push. Okay, and that's a hint. Okay, so then they can maybe use that to the advantage with maybe a range. They don't trade the ranges, so they wait for break of that range and then look for retest of that range in a continuation towards the downside, with this being the take profit level. Okay, it's complicated. You don't have to understand the first time, like I said, but the question again is counter trend trading wrong? In my opinion, it's not at all. Okay, but without a kick minute to someone that's starting out as a beginner, absolutely not. Why not? Because you need to have experience in understanding how market structures move. You need to be able to identify candlesticks patterns, to identify structures, to identify patterns, multiple time frame analysis. All those type of things all comes together as one. Whereas when you're trading with a trend, it is way more easier, just because the market's momentum is surely showing you where exactly it's heading to. So if the market is showing you that this overall momentum is pointing towards the upside based on a high time frame analysis or time frame chart, um, typically speaking, you want to trade with a trend because it's much more easier. All you have to wait is for the market to come back into that potential support or that potential resistance, give you maybe one or two candlesticks, and then you can maybe look to take a trade and let it be. Does it mean you're gonna win all the trades? No, it doesn't mean that. It just means that by you taking these type of trades over samples of trades, you should be profitable. But there isn't such thing as 100% winning strategy, and I keep saying this in each and every single one of my videos. Not like I'm sitting here and I've got a manual that that there's like a guru type of thing going on. Nah, I don't. But I do want to make sure that you all understand the difference between a counter trend trader and a trend trader. Okay, so we can look at some live examples over here, and obviously you can all see that we've got a downtrend. How do you know it's a downtrend? The overall movement, guys, is pointing towards the downside. And to keep it nice and short and simple, a trend trader is only looking to sell this market because the market is moving towards the downside. They don't want to buy this market because they trade with the trend. So if the market, for instance, is in this level over here, we create to this level, pop, 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 they will wait for this level to be formed, and then they'll maybe look to take a trade at this level here in anticipation of a continuation back to the downside. Whereas a counter trend trader, you will see that the overall movement is indeed pointing towards the downside. Okay, so the market is indeed going down, but they are willing to, maybe if they wake up in the morning and they see that this is a potential resistance and the market is currently trading over this level over here. Okay, so let's just say this is how your chart would have looked. If they know how markets move after a strong push phase that we have over here, okay, they understand that after strong push phase, they usually would then have an exhaustion phase and then a continuation. So it will look something like this. They understand that the market's phases move like this. It will push down, exhaust, and then continue down. Exhaust and then continue down. They understand this because it's market structure. Indeed, over here as well, they see that this market has really pushed a whole lot down. Now they're just looking for entry reasons. They're looking for candlesticks that's maybe going to start depleting, where they're going to start seeing a lot of weak rejections, and then they can then use these things, or maybe on the smaller time frames, by scaling down, using scaling down techniques. They'll maybe throw a circle around this level, and they will maybe go down to the smaller time frames, such as this is a daily chart, and maybe we'll go on the 1 hour chart, to look for entry reasons such as break and retest. Because if you go down a smaller time frame, you should see this as a range, and then this is what they would do. Okay, this is a counter trend trader's perspective. There's a whole lot of work that goes into it. So you obviously see here now they've got a range. Okay, they've got a range. And of course, what the range it basically just indicates that there's indecision in the market. Either buyers or sellers are in charge because the market is moving towards the side. So they will then just wait for the market to then break to give them indication that the market could go back to that higher time frame resistance that you have drawn out on your daily chart, and then they will look for a retest, which what they will be having here, and again they will look to maybe take a trade over here with this small candlesticks maybe forming over here, and then look to go up to the upside. Okay, so as you can see, if you are trying to counter trade, it's not the easiest thing to do. It requires a whole lot of practice and experience for you to be able to identify these patterns forming, and etc and etc. Okay, so hope that makes sense, and I hope I cleared some things up, because we all come into this forex market, and honestly there is so much strategies that is out there, and I believe they all work. whether you're a person that trades with liquidity, supply and demand, Fibonacci retracement, whether you're trading with technical indicators, whatever the case may be, man, EMAs, it all works. To be honest, it all works. But the goal is not to learn everything. The goal is to learn a strategy and stick to that strategy. Like, do not deviate, do not contemplate. You have to literally stick to that strategy, because once you start deviating and starting to move from one strategy to another, that's how you end up in a roller coaster of moving from one strategy to another. Because every single strategy you're going to learn in forex has a specific amount of um, win rates that you're going to have with it. There's a certain amount of losses and amount of wins that you're going to have with it. So no matter where you go, I mean, even professional traders are trading in firms, institutions, they themselves do take losses. So if you're going to keep moving from one strategy to another, looking for the holy grail, you're just going to keep going in the same circle, same routine over and over and over again. Before you know it, you're either going to give up and think that this whole thing is just a scam, and you're just going to throw in the towel and move on with your life and maybe try something else. And even if you do go ahead and try something else in life, if you keep moving from one thing to another, you're gonna keep going in circles and you're not gonna form or build that foundation that you genuinely want to build. So I hope this video did clear up some things. I know we came here to talk about counter trend trading and versus trend traders, but I just thought to maybe like put that as well in here, because we all are seeking for that 1 to 100 thingy strategies. But honestly, and I believe it does exist, there's people that do that. But for myself as a retail trader who's limited to, news feed, base softwares, whatever the case may be, I prefer keeping my charts nice and simple. I understand my win rates, and I just come into the charts and execute my trades as consistent as I possibly can. Obviously, if it's your first time into this whole trading vibe, it might be a bit difficult because you're still trying to figure out what type of things you like, what type of charts you're into. Do you like trading during the day, during the you more of a swing trader, more long term, or you like scalping, you like the draft things, you are gonna go around back and forth trying different things. And eventually maybe gonna hop into something that works the best for you. But I hope that you have learned something from this video, honestly, and that you can maybe use this in your advantage when you are trying to trade, and to understand that there is nothing really, there's not a major difference between a counter trend trader and a trend trader. Neither or is wrong. It just means that if you know how to counter trend trade, that basically tells me that you know how to trend trade as well. Because you can't counter trend trade if you don't know how to trade with a trend. Because trading with a trend is basically the basic of trading. It's like you just look for where the momentum is going to, and you follow the momentum. Or that's basically it. Just look for the momentum and follow the momentum. Whereas with counter trend trading, you are looking at different things. You're looking at multiple time frames, you're looking at candlestick behaviors, you are looking at market structures forming and all those type of things. So you're reading so much things at once. So that could be a bit more complicated. For someone that's starting out, just focus on learning how to trade with the trend. That's my advice, and stick to that. So yeah, thanks a lot for watching this video. If you're watching up until this time, man, I kindly would like to ask to please hit the subscribe button if you like the content that was released. And yeah, smash the like button, man. Show some love. I mean, there's still a new channel. I'm not really active on it, but whenever I do get opportunity to upload some videos, I will definitely make sure that I do release some content out. And yeah, man, just turn on notification for any new uploads I may have. And until next time, I will see you guys on the flip side.